Okay, welcome to the Swing Trading with Cycles channel. We're going to cover Mag Silver today. This is one of our individual minor videos. And I actually didn't have this one on my list originally. I'm forgetting, someone made the request on Twitter. I took a quick glance at the chart and was like, oh, this is actually pretty strong in terms of relative strength. And so I feel like it's one that we should definitely cover off on. So let's get into it. So we are looking at our classic setup here. With the daily, weekly, monthly, and this is your 12 month. And then we also have our 2-panel setup with Mag Silver itself versus Mag Silver divided by SIL, the ETF. We could also divide this by GDX. Let's see. Does that change the picture materially? It does actually. It is underperforming GDX a little bit actually, but we'll keep it to SIL for now, and let us start with where we stand in like just the absolute charts. So this is your annual chart, your yearly chart. So each candle here is a full year of price action, and you can see the 2022 candle. So this is your 2022 candle here, this big long doji ugly thing here, and this is your 2007 candle. So it was the first year that this data was available. So this is a relatively new issue. I mean, compared to some of the other miners that have been around for a little bit. But the first thing that you want to be aware of is because of the shape of this candle, all the wick, 2023 is going to be an inside year. So right now we're trading at $14.91, and this is Mag Silver again, ticker symbol MAG. The high for this year was 1958. And the low was $10.32, right? And we're up here around 15. So if unless we drop below 1032 and make a new low, or we go above 1958 and make a new high in the next month, right? Because we only have and this is November 28th, by the way. Although we're reviewing this in the grandest of timescales, so this is going to be applicable for a much time to come, right? Late 2023, this will still be somewhat applicable. But the point here is, because of this ginormous range that we have and where we're likely to close at the end of December, we can be pretty certain we're going to have an inside candle to start 2023. Doesn't mean we're going to close the year as an inside candle by any means, but we're going to open as an inside candle, most likely, right? Because, if we continue to move lower, then let's say we close somewhere around here, and that means we're likely to open like right there. So I've drawn this rectangle. So that's probably what 2023 looks like to start. And then it gives you some kind of some really clear levels, right? Until we break above 1958, it means we're not trending higher on the yearly chart. Like that's important, just like really big picture. Are we making higher highs and higher lows? Or are we doing some kind of range thing? Or are we doing the opposite? Until we break out of this range in 2023, we're doing neither. We're in a range, right? Now, that doesn't mean there isn't clear action on the lower time frames, which we'll look at right now. So let's zoom down to the 3-month chart, your quarterly chart, and boom. That's right, folks. I hope this is clear to you. I hope you're starting to see this as you're reviewing the content on this channel, hopefully doing your own homework. This is a quarterly swing low. This is a quarterly chart. Every candle here is 1/4 of price action. And so we have a swing low once we cross above the high of the candle that marks the low. And so that's last quarter's candle, right? So that's Q2, right? The high for that candle is 1437. So we're now right here at 1492. So we're above that for now. And just as I mentioned for the yearly candle, this quarterly candle has quite a bit of upper wick here. And so unless something dramatic happens, we're probably going to open Q1 of 2023 as an inside candle, which makes sense because if the year is opening as an inside year, then it means by definition your Q3 candle is a yearly candle, like they're identical for the first 3 months. So that's important to know about as well. Again, we're talking range bound action, so it's not exactly super bullish, but it's also not incredibly bearish either. The thing to focus on is that we have this swing low in place, right? Good things happen after swing lows, like that one, like that one, like that one. Obviously, in this case, we went on to make a much lower low, and that happens, right? Swing lows fail. But in this case, you had a few quarters of upside before you had that swing low fail, right? And so we're watching to see, does this hold? Do we keep working our way up the levels? And the next significant level would be this big bearish red candle, your Q2 candle, which has a high at 1847, right? We're going to have to take that high out at some point. And so that becomes a logical target for you once we confirm we're in the advancing phase of a cycle. And we're going to get to cycles just now. So that's your quarterly chart. Actually, let's just zoom this down to the monthly. Let's see what that looks like. Okay. So you can see I didn't move the line. It's still right there. This is the multi-time frame analysis, folks. So by clearing above this, this cluster of consolidation, that's our quarterly swing low. And not to belabor the point, but remember we talked about how we had a wick in the yearly candle, we had wick on the quarterly candle. You can see we obviously have wick here on the monthly candle. So again, unless something dramatic happens in the next 2 days of trading, December probably opens as an inside candle. So don't just not to confuse. That means December probably opens as an inside candle, and then we have the 2023 Q1 candle and yearly candle also inside. All that to say, that is painting a picture of a lot of consolidation, right? Potentially, unless we break down below those key levels, and that's the key, and that's the important bit. Knowing what those consolidation levels are gives you a clear box to kind of draw price around price. And if we violate that and don't have a false breakdown, well, then look out below. So that's your monthly chart. And on the weekly time frame, what I want to do here is actually look at how we've trended since the COVID crash, right? That big rally that we had in silver and precious metals in general. So I'm going to get rid of the indicators so that this chart is a little bit cleaner. And so this is your big COVID low, right? And if you notice, this is a bullish outside candle because we make a low below the previous candle. And this is your weekly chart. And then we go green and go rocketing back up and make a high above it. That's an outside candle. Makes a higher high, makes a higher low. And so that started off the rally. And then we rallied, and I'm doing this in real time, so this gives you a little bit of a look behind the curtain. So we rallied, so that was week 1, and you could say, to my eye, this rally continues until like there, right? So that's 26, and you see it says 26 bars. It's you always have to add 1. I don't know, for some reason it's not counting one of them. So this is a 27-week cycle, right? Which is to say, the whole cycle lasted 27 weeks from start to finish. The top came on this week, right? Where was it? So that week is $18 is the high, $18.25, actually this week. So that had a top on week 20. Let's just add that here, just for context, folks. Okay, and then our next cycle, so rallied for 20 weeks. That's nice. You could say something like that, right? And I'm not trying to fit a 26 or 27 or whatever week cycle. I'm just looking at the chart and matching swing low to swing low, right? That's what I'm doing, right? Like I'm from this swing low to that swing low, from this swing low to that swing low. This just happens to be 27 weeks again. That works. The high was this week, and that was 19. So that's interesting, huh? So we topped out on week 19 for that cycle as well. That's a mighty coincidence. Or, I mean, that was week 20, but very similar, very close, right? And then for the next cycle, that's your clear top on week, what is that? Week 10, week 11. So starting to get a little bit more bearish. And I say this is your low, right? That's your swing low. So that's 27 weeks, top on week 11. So that we're getting closer now to the present. Again, it's November 28th as we're recording this. So, the week after Thanksgiving. This is your clear top on week 5. Yeesh, that's very bearish. So this looks really long, right? So that looks like a really long cycle that kind of winded up a little bit, but very bearish because we had a top on week 5. I mean, you could quibble and say, oh, well, actually, this cycle ended on week 16, and then this was another cycle. Who cares? Same diff, right? That takes us to the weekly cycle that we're in now. So and notice, whether we make this one weekly cycle, I'll just draw that out. I don't want to belabor the point, but I mean, again, these videos are meant to be educational, right? So like you could say that was a cycle that was just really short, right? At 16 weeks, and then This is the beginning of another cycle, has a top on week 6, and has a low on week 24. That actually might make more sense, right? Okay, so, but notice whether this cycle and this cycle are one cycle or two cycles, it doesn't even matter, right? Like the price action is a price action. We're making lower lows and lower highs. We're in a downtrend. You know, you can quibble about if it's in 39 week, if it's one 39 week bearish cycle or two cycles that are smaller. And where does that take us right now? So this cycle that we're in right now started on June 27th. And so far, the top was on week 17. Oh, that's interesting. So far, the top was on week 17, and this would be week 20, right? So, let me just double check. Was this a higher high? So, this week, the high was 1321, and this next week, it was 1321. Oh, so double top. No, that's, I think TradingView is acting up. But suffice it to say, this is obviously your high here, right? Like, and this, to be fair, is a bull flag, right? We are consolidating inside the range of that big candle from the week of November 7th, right? And so it's now really a question. Is this working again? I don't know why this is. Let me just try to refresh this. Okay, that's annoying. Okay, we're back in business. So the high for that week is 1620, and then that following week, yeah, so it's a double top. That following week was also a high of 1620. So the week of November 14th. So this is our high, and this is all, these last 3 weeks, including this week that we're in now, are consolidation inside the range of this candle. So a high of 1620 and a low of 1435. That's what these lines are. Just, you're seeing behind the curtain here, folks. So this is pretty clear, right? As long as we stay inside here, you could make the argument that this is a bull flag. Now, the fact that we're so late in the weekly cycle, 18, 19, 20, so it's week 20, means we're obviously closer to an ICL. Like, we're closer to the end of the cycle than the beginning. So that in and of itself should make one cautious. And this is Mag Silver specifically. That said, it might give us some clues as to the direction of silver as a whole, right? And precious metals in general. But for now, that gives you some pretty clear levels. And like even closer, your first warning level would be breaking below last week's low. So last week's low was $14.71. We're here at $14.94, so 20 cents higher. So we have 20 more cents to the downside, and we start to head towards $14.35 and maybe even lower. And then if we are to get through that level, that $14.35 level, that opens up $12.69, right? Because you can almost think of this bull flag as like, this is like the pole of that bull flag. So when a bull flag fails, you're like not worst case scenario, but you can often find that it'll get back to the base. And you can see this blue line is a 10-week moving average. So we're probably going to cross below that as well. And that's obviously moving higher. So maybe we get spared the 1269 fate. But it does seem like we have a date below $14.35 and probably $14 even at the end of the day. So that's the weekly cycle. And if we zoom into the daily chart, that could give us a little bit of a clue. So this is very clearly our daily cycle low. And this is an important concept to understand. Cycles are nested within each other, right? So when you have a higher time frame cycle, by definition, it means you also have a lower time frame cycle. What I mean by that is every weekly cycle low is also a daily cycle low. So by seeing this daily cycle low, and we know that we're in weekly cycle decline, we can kind of use that to triangulate a little bit almost. So this daily cycle has been rallying for, so the top for this daily cycle was day 33, right? So here, was that right? Yeah, so that's that 1620 that we talked about. So the high of the weekly cycle is the high of this daily cycle, you know, when you zoom down to the daily level. And so that's day 33. So this is 34, 35, 36, 37, 38, 39, 40, 41, 42, 43. So pretty long daily cycle, which tells me that we wouldn't be surprised to get our daily cycle low sooner rather than later, which is good news because it means maybe we can avoid making that weekly swing low, as we talked about, and this bull flag can be mostly preserved. Maybe we get a dip below this and then a pop back up, which would be a false breakdown. But again, we're getting closer to the weekly cycle low than we are at the start of it, so caution is warranted. And finally, we'll close out by comparing this name to its peers, right? So let's go to an annual chart, 12-month chart, and we just saw this chart already. This is MAG. I'll get rid of the crosshairs. This is MAG. Each year each candle is one full year of price action, and then you have MAG divided by SIL. What do you notice? It's near all-time highs. The ratio chart is, which means MAG has been massively outperforming SIL, the Silver Miners ETF, this year. I'm guessing that is also true of SILJ. Yeah, same idea. A little bit different, like more consolidation versus SILJ last several years versus the much more cleaner uptrend. Let's flip this back to SIL, though. And it's the same principles. If you want to do this on your own and use SILJ or use GDX or GDXJ, pick your poison, same idea. This is about the concepts. And so if we zoom into like the quarterly chart, remember we know that we have a swing low on the quarterly for the absolute chart, and we're just making new highs on the ratio chart. This is all really positive because it tells you if you want to be in silver, this might be the name to be in. There is one catch though. Now if we zoom into the monthly chart, right? So like if the monthly chart, and again, the right-hand side is the ratio chart, you can see we have this gnarly looking topping candle, which is not bullish at all, right? I mean, if anything, this is a textbook topping candle, right? Like where like this looks really bearish and suggests the next candle is going to make a swing high and we're going to start a downtrend. So it is very possible that the great outperformance we've been seeing is starting to come to an end. So we're going to be watching that for sure. But as of right now, this is definitely one of the best performing names versus its peers. And we know in absolute terms, again, we have that quarterly swing low in place. We know what that level is that we need to stay above. So I like this name to the extent that one wants to be long Silver Miners, that is. So we'll leave it at that. We definitely have a few more names to cover, and we've already covered quite a few. So definitely take a look at the links in the description. I've organized these into playlists so you can kind of easily find individual miners that you're interested in. Thanks again for watching. If you haven't already, I asked you to consider subscribing. Definitely like the video if you found value in this content, and certainly open to any questions or discussion in the comments. Thanks again.